Hello and welcome to yet another live session, and we are going to have a special tribute to Rakesh Jhunjhunwala, right? Mr. Rakesh Jhunjhunwala told that you may call me a fool, you may call me anything. I may not live to see it, but I can tell you one thing. India will overtake China in next 25 years, right? So that is the trend which we are talking about, the big mega trend that is in front of us, that is India. Okay, so we are going to dissect how India is getting benefited, particularly from China plus one strategy. Okay, I'll go deep dive into this session. We'll discuss how the entire China plus one strategy is playing out, what all sectors are getting affected, how government is helping pushing this sector, and it is where you can also get a lot of sectors and stock ideas to invest in for long term. Okay, now quick disclaimer, this video is also sponsored by our partner Small Case, who has also contributed in Make in India campaign. So just that is a disclaimer. So if you're all ready for this session, let's get started. Just type ready in the comment box. Yeah. Awesome. So we will discuss a couple of events and the flow in terms of how this entire thing happened. Before that, I'll just share what is happening. Okay. So first, we'll learn about what is China plus one strategy, why it is important, how did this entire China plus one phenomena accelerate, and what were the triggers about it. How will India and other countries benefit from this, and how government of India is helping to push this mega trend forward? What are the industry players that will get affected, and are they prepared for it? And finally, we'll discuss around sectors and companies that can benefit from this. Yeah. So this is the broad structure. And those who are watching it for the first time and don't know me, I'm Vivek Mashrani. I'm TechnoFunda Investing specialist, and I help a lot of people to achieve their financial freedom using TechnoFunda Investing process. And a lot of 5,000 plus members have got benefited through the entire journey which we are doing. Yeah. So let's get started with what are the key triggers to understand, right? So hope all of you are able to see my PowerPoint. And this is just like a quick disclaimer before we even go deep dive, so that if any stock ideas I'll be discussing, this is the quick disclaimer around the stock ideas. So let's jump into what China is and what China is all about, right? So China is all about dominance in terms of the manufacturing sector. So if you see the left side graph which is there, it says that almost like 30% of manufacturing or value added which happens in the manufacturing sector, that is dominated by China. And on the right side, you can see how, year on year, you can see that brown graph which is there from 2004 to 2019. This data is around 2019. You can see how from a share less than like 8 to 10%, they have gone all the way around to 27-28%. Right. So the percentage share of China has been swiftly moving upwards, and it has overtaken majority of these developed nations like United States, Japan, and Germany. Okay. And that is where the entire piece gets super interesting, because this entire country is super dominant in terms of what they are doing, and then suddenly some triggers happen. Okay, these are some of the triggers that happen, some of the global event that has shifted the entire mega trend that was in favor of China. So the first thing that happened was a blast in a place called Jiangsu. We'll go deeper around it. I'll talk more about it. But this was the first event which triggered this thing. Okay, and the entire chemical sector industry, this was in 2019, got shaken off because of this, right? And I've covered deep dive into this in my video also, which is on chemical sector analysis. 2018, when I made this video, nobody was believing that this is a structural mega trend. But after that, in next 4 years after I created that video, a lot of companies became multi-bagger out of that. Okay, so you can watch that at a later point of time. The second thing that happened was COVID. Right, 2020 March, the entire world was shaken off because there was a lockdown in China much before March 2020 itself, and the global supply chains got disrupted, because when you are in a manufacturing sector, you have like supply chain. Say for example, you are manufacturing Airbus aircraft, you are sourcing your parts from multiple places in the world. Okay, and if one critical part is also missing, then your entire aircraft cannot be delivered, because that critical component is not there in your supply. So this entire supply chain needs to be going very, very smoothly. It's like, well-oiled machine, it should work like, okay. So that's where the global supply chains are super important. And China played critical role in a lot of these critical parts, because it's a manufacturing hub and one of the top manufacturing destination in the world. Okay, that's where this entire thing happened. Now, the third thing which triggered the entire scenario is China and US trade war. Okay, so after this entire event and drama happened, and the new government came in, lot of trade wars started happening, right? So they started doing a lot of anti-dumping duties and sanctions on various products by each country, and that is where also whatever we are talking about, the China plus one strategy is also super important. Now for India, there was one more trigger. Can anybody tell me what was that trigger? Very, very important trigger which happened was a Doklam, standoff. And that's where government of India got pissed off really with the Chinese government. And we are one of the major importers of Chinese goods. And we are net, deficit in terms of trade, what we are doing with China. So we are major importer, and still, they were dominating us and they were taking over land in Doklam. That's where government also levied a lot of anti-dumping duties. These are the modern days wars, right? Anybody cannot afford a big war. So what people do is cyber attacks and biochemical attacks and trade, regulations and all those tightening first is used before even you go to a full-fledged war. Okay, so that's where India also strategically started seeing China as a threat, and a lot of these actions were taken to reduce the import dominance of China and weaken it from the economy point of view rather than directly going at war. Okay, so that was one more trigger. And finally, one more recent trigger that happened was Ukraine war. Because of Ukraine war, the global supply chain got disrupted, particularly the gas and the natural resources and wheat. And that's where world again realized that we cannot depend on one single country for our supply chain. Okay, so are you now realizing why, this multiple triggers like Jiangsu blast, COVID, China-US trade war, Doklam trigger, Ukraine war, and recently also a Taiwan issue, right? So like semiconductor industry is predominantly dominated in Taiwan, and again China is tight-fisting US, and a lot of news are coming that China is doing a lot of testing of weapons near the Taiwanese border. So these all events have triggered a panic attack for the companies which are dominating their supply chain just from the China sourcing itself. Okay, so that's where all the CFOs and the strategic people inside the company started thinking that can we just depend on one country as a supply chain, and what if this country gets disrupted, our entire product goes for a toss. So are you understanding the entire, background, like what is happening and why, companies have realized to diversify and de-risk their entire supply chains and have backups in place? Okay, so that's where, a lot of these manufacturing also started shifting into countries like India, countries like Vietnam, Thailand, Bangladesh, and Malaysia, which are again good manufacturing hub, low cost labor, and overall in terms of political stability, they are much stable compared to other countries where the other things are not in place. Okay, so that's where this entire thing starts unfolding. Now, as I said, I will talk about more in terms of what happened in this Jiangsu blast, and I've covered this in detail in the video which I mentioned on chemical sector. You can later on go on, but what happened is, suddenly there was a big blast that happened in one of the factory in Jiangsu. Okay, and a lot of people died in that accident, and that was a trigger of compliance check in that country. So, a lot of regulations started coming in and a lot of new compliances were put in place, due to which a lot of chemical factories in that belt, which I'll show you how much, the factories were there. So this is a slide taken from Atul Limited presentation. A lot of important chemical factories and specialty chemical factories were surrounded in that area, and those or supply chain got disrupted, and because of that a lot of business started coming in India. And this has now become a structural trend, because now people have realized, the companies have realized, that we cannot afford to just rely on one country. Okay, that's where India is getting benefited. Now, just as a token of appreciation, just because you are here live, I'm willing to give you one gift. Are all of you, ready for the gift? Just type yes in the comment box. So just because you are here live, you can avail this TechnoFunda Investing Formula course, which is worth 5,999 by entering this link technofunda.co/basic, and then apply a coupon code formula, and you'll be able to get the access of this course. Okay, so you can learn at your ease just because you are here live. And I've also saved the link in the description, and I've also pinned inside the comment, so you can check it out later also. So this is like just a token of appreciation for all of you who are here with me and listening till now. Okay, we have spent almost 11 minutes. It takes courage in today's time and age to stick for more than 10 minutes. Okay, so now what is the shift that is taken, like what India is doing? So that's where one of the biggest campaign that happened was Make in India campaign, and that also accelerated this journey. And I also did an interview and a deep dive discussion with founder of Niveshai, Arvind Kothari, which was more than 2 hours discussing the same topic and a lot of case studies. You can go and watch it out later. Just type Scuttlebutt Investing, Vivek Mashrani or Arvind Kothari, you will find this. But that's where also it triggered a lot of these changes across the global supply chain. Now, what is the diversification strategy and what are different areas where it is affecting, right? So let's think about India now, right? So how this supply chain diversification or de-risking of the supply chain is helping India, and how we are, taking advantage of that. So there was a survey conducted by UBS, I think 1 year back, if I remember correctly, that suggests that 20 to 30% of manufacturing will be leaving from China, making India the next best candidate to benefit from this altered situation. Why India is in a strategic position? Because we are a large country, we have pool of cheap labor, we have a lot of resources available, and also politically we are stable, and we have democratic government, and we are friendly people who are gelling with all the other counterparts in the world very easily. And very few times we have waged a war just without any provocation, right? Unless we are provoked, we don't wage a war. So it's very, very stable country which we are living in, and that's where it is the first choice after China for companies to manufacture in India. Okay, now which are the key sectors that are benefiting? So first is textile, second is specialty steel, the third is specialty chemicals and pharma, which I talked to you about recently, and then another sector is electronic manufacturing. Okay, and these shifts which are happening, right? So think about yourself as a CFO. Say for example, you are sourcing say 100 crores worth of raw material from say China. Now you diversify and say do 30% from India and 70% from China. Now this is a very, very sticky thing, right? Overnight you don't change this. This is a structural change that has happened, and it will continue. It's like a megatrend that will continue for years to come. And that is why we should be paying attention to this entire phenomenon that is happening. Okay, are you able to understand the importance of this and why this entire global supply chain disruption or the diversification or de-risking, whatever you want to tell, is super important for country like India? Okay, so that's where it gets really, really interesting. And by the way, if you are not yet subscribed to my channel or you're not liked this video, please do that. It means a lot. I understand that you are getting it and you are enjoying the content so far. It also gives me understanding that you are all on the right track to get this entire concept, right? So if you're not hit the like button yet, please do that. And if you're not subscribed to this channel, please do that. Okay, so let's come to the acceleration part, like how this entire sector got accelerated in its journey. Okay, how this phenomenon started and how it accelerated. So I'll share my screen. I'll talk about key initiatives which government of India took since 2014 when Modi government came in, and how both these things combined have accelerated this entire factor. Okay, so the first thing which government did very smartly is called PLI scheme. So it is a scheme which incentivizes manufacturing based on the actions they are taking. It's action based performance what they check, and then they give the incentives to these companies. The second thing which is very, very important is Making in India campaign. Not only it triggered a boost in terms of manufacturing, but it also triggered in minds of Indian people that you need to buy things which are made in India. Okay, so that initiative was super important. The third thing which happened is Atmanirbhar Bharat initiative, where we also understood that we cannot rely on partner like China. They can block a lot of things for us and our supply chain can get disrupted. Even the CEOs and CFOs of a lot of chemical companies, pharma companies, manufacturing companies realized that it is too risky to depend fully on China, and that's where they also started sourcing raw materials from nearby ecosystem, and they also started doing backward and forward integration. So that's where also it is very, very important. And because of the Doklam issue which we understood earlier and a lot of conflicts that happened between India and China also, government of India took a lot of anti-dumping measures where a lot of products were coming at a cheaper price and they were just dumping inside our country. Fifth thing which India did very smartly and very great move in terms of the corporate tax reforms, right? So Indian government reduced the corporate taxes of private limited and limited companies, and that was a very, very smart move to attract a lot of foreign money in the manufacturing space. And finally, government is also giving a lot of export and R&D incentives. So both the things combined, where the opportunities were there and right incentives were placed in the right time, that is where it triggered a lot of powerful stuff, right? And we heard Mr. Modi also, our PM, on 2014, I think 26 January, when he gave the speech, right? Let's hear this.
मैं आज लाल किले की प्राचीर से विश्व भर में लोगों से कहना चाहता हूं, कम मेक इन इंडिया, आइए हिंदुस्तान में निर्माण कीजिए.
Right, so rights policies and right focus and all these global triggers actually is helping multiple sectors. So are you ready to go deep dive into some of these sectors and understand where the opportunity lies and how you can benefit from that in terms of your investing also? Are you ready for that? Yeah, just type ready in the comment box. So I'll just show you a couple of depth sectors, how it happened. Now first let's understand what does the PLI scheme is targeting and what all sectors they are giving incentives. So if you see the entire table, and I've also shared this link, I'll share it in the chat box also in the description later, from Lending Card, which has described this entire phenomena. And in fact, I'll just show you how this entire piece has also come out, right? So if you think about the production linked incentive, the sectors like automobile components, automobile, chemicals, electronic systems, food processing, metals and mining, pharmaceuticals, renewable energy, telecom, textiles and apparels, and white goods. All these sectors the government has targeted, and if you think about it, these are all strategic sectors where India was lacking and China was dumping a lot of goods, and we were not able to compete with China in some of these sectors due to the kind of incentives their government were giving and a lot of other things, right? They're pegging their currency and a lot of other things which were helping them. Government specifically targeted these sectors and they are giving boost to these sectors. Okay, now the first sector which we will try to understand is called textile sector, right? So textile sector is again very important strategic sector in India because it's one of the largest employment generator in the country after I think infrastructure and real estate and one or two other sector, but it is one of the highest employment generating sector. It has been dominating in India since long time, but since last few years we had got lesser edge versus the global players like China and Vietnam. But because of this event and even US banned cotton made from this Xinjiang, okay, which is 80% of China's cotton originator. Okay, so that is where the trade war, which we discussed earlier, helped the textile sector in a big way because of this blocking. And US is one of the biggest consumer of textile, and this is what happened, right? If you see the table on the right side, India was able to increase the market share in terms of their export, although it is not so much high as Vietnam. So Vietnam, if you see in the gray, they jumped from 15% to 20%. So they actually were ready and took a lot of advantage of this event. But for India, it was from 5% to 6%. Okay, but still that 1% trigger is a huge trigger because the entire sector export is also growing, and then 1% is also a big trigger. And because of that, our textile sector also picked up. If you see the stock prices in 2021, a lot of these textile sector companies got re-rated, right? And what are the advantages in this sector? We have access to raw material. We have abundant cotton crop which is happening. We have presence across the value chain, right from the cotton to yarn manufacturing to coloring those yarns and finally making the apparels, right? So we have end-to-end value chain inside our country, and we are already integrated with world globally. So if you go to some of the biggest store in US and UK and even European countries, a lot of these super stores which are there, big stores which are there, malls which are there, you will find a lot of Indian manufactured clothes. And we have cheap labor. It's a focus area because it generates employment, and also PLI scheme is targeting this, right? So that's where textile got benefited. What all other sector got benefited is specialty chemical and pharma, right? So specialty chemical, super growth it has done, and a lot of companies coincidentally in 2-3 years after 2018-19 started doing a lot of capex. So one is specialty chemical and second is pharma. Both these sector exponentially got benefited from this. If you want to go deeper, I did a video just real time when this PLI scheme for pharma and API was launched in March or April 2020 or May 2020. You can go and learning about API and pharma dynamics. I've gone deep dive there. I'll not take too much time here, but you can go through that. Yeah. But what happened is the pollution curbs, which I mentioned earlier because of the blast which happened, that triggered a lot of supply chain diversification and de-risking of supply chain in the specialty chemical industry. And at that time, a lot of people were skeptical whether it is a structural trend or a short-term trend. But rest is history. You can go through my video in 2018 and an amazing kind of growth that happened. Okay. So Indian companies did aggressive capex with execution capability because we are very good in execution. We have a lot of R&D capabilities. We have got a pool of good scientists, good technical people who are able to grab this opportunity. And other side, on the company side, all these companies were highly profitable, strong balance sheets, and they had capability to do capex without stretching their balance sheet too much, right? So if you see the right side graph, you can see the GDP growth and chemical company growth actually decelerated due to this pollution curves which happened. And on the right side, you see the EBITDA margin of Indian companies, how it has spiked because of this entire thing which is there. Yeah. So this is where this entire trigger helped Indian companies to become more profitable, do more capex and grow much more aggressively. And a lot of these companies have actually become compounders, right? They keep on growing like 20-25% structurally for long term. And I also do a deep dive session into hackathon, which I do for my investment community, where actually we build a core portfolio by understanding all these parameters, how to find these kind of core portfolio compounders. Okay. So that's how, once you do that exercise, you can actually find all these winners and go deeper into it. Now, next sector is, called specialty steel. Okay, this is again a very, very niche sector which is also getting benefited. Okay, so I'll just share what all things are happening in this sector. So specialty steel, what is happening is, again, the Make in India policy is giving boost to manufacturing, and we are trying to cut down our import. And this PLI scheme was just recently, like 1 year back, it got approved, worth outlay of 6,322 crores over a 5-year period, right? And it will trigger from 23-24 year, right? So 2022, 23, 24, it will trigger. So next year onwards, you will see the triggers in some of these companies, right? So companies like JSW Steel, APL Apollo, lot of these companies will get benefited because of this entire thing which is happening. Now, specialty steel is a downstream product in the entire steel manufacturing process, and through upgrades to its industrial ecosystem, India wants to join advanced steel making companies like Japan and South Korea, right? So we want to go much farther in terms of value chain when it comes to steel, because it's one of the critical material, and also it is huge import, right? If you want to think about the kind of import which we did in 2020-21, India imported 6.7 million tons of steel, out of which 4 million tons was specialty steel, which is worth 30,000 crores. Okay, 30,000 crores rupees we are spending just on the specialty steel. And through PLI scheme, India wants to plug this gap in the market demand by sourcing domestically and creating products for export. So we are also thinking to export it so that our trade deficit is not that much. And the PLI scheme is expected to draw investment worth 40,000 crore and expand capacity of specialty steel by 25 million ton from 18 to 42 million tons, right? So that is what we are targeting. And if that happens, we can also become a hub, not only for India, we can also become, good exporters inside this particular sector. Okay. So if you are getting this so far, just type yes in the comment box if you are getting what we are discussing so far and what is the kind of opportunity we are lying. And by the way, if you want to also go deeper into it, there is a very amazing small case which is there, which I'll share the link with all of you, which you can also subscribe, right? So this video is also sponsored by small case, so we'll just share the link in terms of how you can use this entire chain or the global chain which is getting disrupted, and what this China plus one is triggering. I'll just share the link how you can benefit from this. Okay, so here is the link, you can check it out. And it is all, they also have like a good discount which is on the Independence Day week, which is like around 25% discount they are getting. So you can just apply this code free 25 and you can also avail that, right? So you can just go to technofunda.co+1 and you can get benefit from this. So now let's go deeper around it. Are you ready for going deeper around what we are discussing? Okay, so we'll go deeper in terms of which other sectors are getting benefited. So other sectors which are beneficiary of this mega trend is logistic industry, right? Because if we are exporting and the goods needs to be transported from one place to another, definitely we need logistics, and that is one of the critical component. The second industry is the electronics manufacturing industry, right? Which is also a very critical industry. And we have done a lot of inroads here. We are one of the biggest manufacturer of Apple phones in India now, and they are also exporting from India. Okay. The third is renewable energy, right? So renewable energy is again one of the key, and a lot of these chips and renewable materials which were manufactured outside India are now getting in India, like Borosil Renewables and a lot of other renewable companies are doing it. And I've done a deep dive video if you want to check it out on renewable energy. So you can just do a search on YouTube, renewable energy Vivek Mashrani, and you will find it out. Then we have a very important industry, which is a subsector of chemical or specialty chemical industry, is called agri-chemical industry, right? So in agri-chemical industry also we have done a lot of inroads, and that has also triggered a lot of benefits inside our country. And I've also done deep dive, like a lot of stock ideas I've discussed inside this industry. You can watch it later. Just search agri-chemical industry, like each and every industry which are beneficiary. Actually, I've studied them and I've gone deeper into it. Then paper industry again is getting benefited, particularly due to Ukraine war and a lot of things which are changing in China. Industrial goods is also one of the beneficiary sector. Cement industry is one of the beneficiary sector. Auto and auto ancillary is again a super important industry when it comes to the supply chain diversification. And I've also done a video again on auto, like I've also shared 7 stock ideas which you can learn and benefit in that video. Apart from that, a lot of allied industry and downstream companies which are also indirectly benefiting from all these sectors, right? So it is a huge trigger in terms of the boosting of GDP and growth of the country, generating a lot of employment and also reducing the trade deficit with a lot of countries like China, right? So it's one of the most powerful mega trend that is happening in front of us. It's up to us how we want to take advantage and how we can go for that, right? If you don't want to do research, as I said, you can just check it out, this small case list. So there are like entire sponsors, small case from all the perspective of China plus one. So you can go to technofunda.co/+1, and they are also celebrating India Independence Day at 75th year of independence, and you can apply this code to get the benefit just because you are here live, right? So that's it from my end. Hope this video was useful and a lot of amazing sectors which we covered. And let me know in the comment section which companies you think are getting benefited from this mega trend and how you are taking advantage of it. And if you have any suggestion in terms of video or any topic which you would like to learn on this channel, please write that into the comment section. And as usual, if you are not yet liked or subscribed this channel, please do that so that you stay connected and we can learn together in this investing journey. That's it from my end. Thank you so much for joining live. And if you have not picked up my book, please go for it. It's called You Can Compound. You can check it out on Amazon, and you can also learn from my book also, right? It's available on Amazon. Just type You Can Compound Vivek Mashrani and you should be able to find it out. Thank you so much for joining, and Jai Hind, take care, and let's make a lot of money from this China plus one strategy. Thank you so much.